Hi students, work in progress is the today's topic. Impact on work in progress, where and all it's going to appear, what are all the commonly committed mistakes with respect to work in progress, not only in costing paper. Now we are going to discuss about impact on working capital in costing, financial management, auditing as well as law also. Of course, I am going to discuss about costing and FM. And I would like to introduce student superstar from Delhi, my friend for the last 14 years, having nice liaison. My good friend Mr. Kamal Garg is there.
Hello Hariji, thanks for inviting me.
Please sir.
Hello students, I believe all of you are doing well and preparing well for the examination. So during the course of this procession, Hari sir will be discussing about WIP with respect to costing and SFM, and I will be discussing about auditing and corporate law. So over to Hariharan sir to discuss the issues.
Yes, thank you sir. Thanks for accepting. Now, I'll take 5 minutes of your time with respect to work in progress. 2 points with respect to WIP in costing and another 2 points in financial management. Where and all WIP impact will be there and where and all students are committing the mistake, that area I am going to highlight now. First one is in cost sheet. Most of the students not even know the terminology in costing paper. The terminology can be the portion known only by way of remembering the cost sheet. If you know the terminology properly, not only in costing paper, other paper also you can be the portion to handle better manner. There are 2 types of cost sheets are there. One is called a simple cost sheet, another one is comprehensive cost sheet. Difference between simple cost sheet and comprehensive cost sheet is, if there is no opening and closing inventory, without opening and closing inventory represent raw material, WIP and finished goods. If there is no opening and closing inventory, then that is called simple cost sheet. With considering opening and closing WIP, or with considering opening and closing stock of finished goods or closing stock of raw material, then it is called comprehensive cost sheet. Since we are going to discuss about WIP, straight away I am going for the comprehensive cost sheet so that you can know the terminology involved in the cost sheet. Opening stock of raw material plus purchase value of raw material less closing stock of raw material is equal to cost of raw material consumed during the period. Add direct labor, add direct expenses, total is called prime cost. Add factory overhead, also called production overhead, also called works overhead, that is called factory cost or works cost. Add opening stock of WIP less closing stock of WIP, that total balance is called cost of manufacture. Add administrative overhead, total is equal to cost of production. Add opening stock of finished goods, the total is equal to cost of goods available for sale, less closing stock of finished goods is equal to cost of goods sold. Add selling and distribution expenses is equal to cost of sales. Add profit is equal to sales revenue. So the impact on WIP with respect to factory overhead is going to appear. After considering factory overhead, factory cost, we have to adjust opening stock of WIP and closing stock of WIP so that we can be the person to identify the cost of manufacturer. The terminology, frequently used terminology, it may be, prime cost, factory cost and all. Cost of manufacture, cost of goods sold, cost of goods available for sale, everything equally important even for the purpose of your auditing profession. Second place with respect to WIP, it's a commonly committed mistake from the student side is process costing, equivalent production. In case of equivalent production, degree of completion, there are 2 different methods are there. One is called FIFO method, another one is called weighted average method. Irrespective of the method, WIP with respect to concept remains same. In case of degree of completion computation, component wise you have to do the computation, material component, labor component and other overhead component. If it is called finished goods, degree of completion always 100%, material 100%, labor 100%, overhead 100%. Exception to general rule, in case of FIFO method, opening stock first you have to consider, for that you have to take the remaining percentage and the current process input always 100%. Degree of completion with normal loss is not applicable, always not applicable. degree of completion with respect to abnormal loss. In general, 100%. But whenever degree of completion for the unit scrapped given in this question means that particular percentage is supposed to apply. Degree of completion in case of abnormal gain, always 100%. Even degree of completion for the unit scrapped given in this question, for abnormal gain, it's always 100%. With respect to WIP, closing WIP. What is called the WIP? Unfinished, semi-finished goods is called WIP. If the degree of completion is equal to 1%, also called WIP. If it's 10%, it's called WIP. 20% also WIP. 40% also WIP. 80% also WIP. 90% also WIP. 99.99% is also called WIP. Therefore, we can't predict what is the degree of completion for the WIP. It may be 1% or 80% or 90%, we can't predict. Therefore, degree of completion for the WIP always it will be there in the question paper itself. Because management has to give what is the degree of completion of the product. We can't assume any degree of completion of WIP in case of equivalent production. Now, we are going to financial management concept. So, two things we have discussed with respect to WIP in costing. One is cost sheet, another one is equivalent production process costing. Similarly, in financial management, two different places WIP impact is there. That is also commonly committed mistake from the student side. One is how to estimate the working capital. There are two methods are there with respect to estimation of working capital. One is called method 1 and method 2. Under method 1, two different ways are there. One is by way of operating cycle. Another one is by way of estimation of each and every component of current asset and current liability. Under method 2, two approaches are there. One is called total approach, another one is called cash cost approach. The reason for telling the same, previous to previous year in examination they asked, explain the methods of estimation of working capital. Students are happily they wrote because many problems we have solved in the study material and the practice material problem, total approach and cash cost approach, they wrote only about the total and the cash cost approach. But in theory, if you are going to see properly, two methods are there, method 1 and method 2. Under method 1 by way of operating cycle, by way of estimation of each and every component of current asset and current liability. That method 1 they fully skipped. From that also past exam questions are there. Therefore, you have to write all the 4 different types with respect to estimation of working capital. While estimating the working capital, what could be the impact on WIP? WIP here represent, we are in working capital. Working capital represent current asset and current liability. WIP form part of current asset. In current asset, WIP represent closing stock of WIP. We are in balance sheet item. Now we are not in the P&L item. In costing, we have discussed about what? Cost sheet item. Whereas here we are discussing about balance sheet item, current asset. Under the current asset, WIP represent closing stock of WIP. How to evaluate or valuation of WIP? How to do the valuation? In total approach, how to do the valuation? You know, raw material mean we can value based on purchase price. Finished goods mean we can value based on cost of production. Debtor based on selling price. Creditors based on purchase price. But how we have to do the valuation of the WIP? We have to value WIP based on raw material plus 50% of direct labor, direct expenses and production overhead. So, raw material plus 50%. What is the logic behind the same? Unless otherwise you are going to give the raw material, WIP won't start. Therefore, full raw material plus 50% of direct labor, direct expenses and the other overhead. So, remaining expenses 50%. Why 50% come? On an average 50% completion, that's the assumption. Again, exception to general rule, many past exam questions are there. If in this question paper, in that industry, WIP component, in that WIP component material 1 month usage, labor and overhead half month usage, the specific information is there, mean the 50% concept is not applicable. Remember one thing, we are doing estimation of working capital. After all, we are doing the projection. While doing the projection, raw material component should be there in WIP. Without giving raw material, WIP won't start. Remaining expenses on an average 50%. That's why 50% of the remaining expenses. But the industry specifically going to give in WIP what are all the components are there. Whenever the specific information is there, the general rule is not applicable. That is by way of our total approach. But in case of cash cost approach, the next model, WIP valuation is equal to raw material plus 50% of direct labor, direct expenses, production overhead minus depreciation. because production overhead inclusive of the depreciation. Factory, we are going to use the machinery. Machineries are subject to depreciation. Depreciation on factory machinery form part of the cost sheet in factory overhead, and depreciation is a non-cash item. To estimate the working capital, how much the fund I need, I am going to work out. That is called the cash cost approach. What is the real cash? For that purpose, non-cash item depreciation you have to eliminate. That's the reason valuation of WIP is raw material plus 50% of direct labor, direct expenses, production overhead minus depreciation. Here again commonly committed mistake is the 50% applicable inclusive of the WIP with respect to including the depreciation component. Many of them depreciation they are subtracting separately. It's not like that. Within bracket 50% open bracket direct labor, direct expenses, production overhead minus depreciation close bracket. Therefore, the 50% concept is applicable inclusive of even for the depreciation concept because it's a non-cash item. Now, another one is first one in working capital, another one double ship. Concept of double ship, even it's a MTP question, mock test paper question and a post exam question also. Impact on WIP. Instead of single ship, if it is double ship, what would be the impact with respect to working capital component? Raw material, WIP, finished goods, debtor, creditors are available. In case of single shift to double ship, raw material we are going to consume double, quantity wise double. Next, debtor going to become double because more production, more sale. Creditors going to become double. Finished goods going to become double because instead of single ship, we are going for the double ship. But WIP remain constant, remain same. Why? Whatever the WIP companies are, the first ship going to become opening WIP of the second ship, they are going to complete again the second ship component with respect to WIP, closing WIP will be there. Therefore, on an average, it remains same only. WIP is not going to become double. For that, based on that, past exam questions are there. These are all commonly committed mistake with respect to WIP component. Same manner, what are all the impacts are there in WIP in auditing paper? Vouching and verification topic. So many years, so many attempts they asked how to do the vouching or verification with respect to WIP. Because in general, in our practice, we are doing the valuation, we are doing the vouching and verification, fixed asset verification, very easy. Plant and machinery, very easy. Debtor verification, very easy. But WIP, in general, we may not have the opportunity to do the valuation or we may not have the opportunity to do the verification also. That's the reason it's a commonly asked question. How we have to do? We are having the better person. Clear? Our Kamal sir going to explain about auditing and law component. Please, sir.
Thank you, sir. Sir, you have nicely explained about costing and SFM. That will be a value addition to the students. Now I will start the auditing aspects of work in progress. To begin with, I must tell you that work in progress can be divided into two categories. One is capital work in progress and second is inventorized work in progress. When I go to capital work in progress, it means that some fixed assets are in making. And when I say inventorized work in progress, it means that something like finished goods or semi-finished goods are in making. To begin with, I will have a pickup of AS2, Accounting Standard 2. Now in Accounting Standard 2, it is being stated work in progress will include the cost of conversion. When I say that inventories will include cost of conversion for work in progress, I think Hariharan sir has already covered about allocation of overheads, apportionment of overheads. This concept is cost of conversion. Now in examination, most of the students are not touching upon AS2 on account of cost of conversion. Second thing is AS3, cash flow statement. When I come to cash flow statement, working capital progress, being non-cash item, do have an impact upon computation of cash from operations. If I go ahead, we do have Accounting Standard 10 revised. Now Accounting Standard 10 revised discusses about apportionment of depreciation on fixed assets to the cost of work in progress in respect of cost of conversion. So you must be very careful. Those fixed assets which are being used for the purpose of creation of work in progress, in certain cases depreciation on fixed assets may be required to be apportioned to work in progress. Now most of the students are not aware, or if at all they are aware, they are skipping it. That is borrowing cost, AS16. There can be certain inventories like wines, manufacturing of aircrafts by airline industry, whereby even inventories are considered as qualifying assets under AS16, and if they are qualifying assets, certain borrowing costs need to be capitalized along with the cost of work in progress. And if I go further, we do have AS17, segment results. Now in segment reporting, we have to disclose work in progress, and that too with proper breakup of cost of conversion and other things. If I proceed further, we do have Schedule 3 of Companies Act. In Schedule 3 of Companies Act, it is a mandatory requirement that we have to disclose cost formulas being used. The things are not here getting over. Let us discuss about consolidation also. In case of consolidation, the accounting policies of subsidiary company need to be in alignment with the accounting policies of holding company. So consider an example. If the work in progress valuation is different policy for a subsidiary company and is different policy for holding company, then these policies need to be aligned with a matching concept. So for that very purpose, work in progress is not a short deal, it's a big deal. And if I take an overall picture, we are not over only with accounting standards, we do have Ind AS also. Even in Ind AS, we do have cost of conversion for work in progress, we do have qualifying assets, and if I proceed further, we do have impairment of work in progress also. Now when we say impairment of work in progress, mind you, for impairment of work in progress, accounting standard 28 on impairment of assets or Ind AS 36 on impairment of assets is not applicable. The impairment of work in progress is already dealt in accounting standard 2, and for that very purpose costing is extremely helpful, because AS2 valuation inventories is the only standard where cost sheet plays a very vital role, and for that very purpose the things are not over here. You need to go for tax audit also. In case of tax audit, we have to report about inventories, and when we have to report about inventories, we have to discuss about ICDS as well, income computation and disclosure standards. Even ICDS says that you have to follow cost formulas, and when we follow cost formulas, the important part is, in case of accountancy, we do follow exclusive method of accounting. That means GST component is not made a part of cost, but by virtue of section number 145 capital A clause number 2nd of Income Tax Act, even GST components are made a part of cost. That means in GST we have to consider ICDS components, section number 145A of Income Tax Act as well. To take an example, say I purchase raw material for rupees 100 and GST on the same is rupees 18. The cost of raw material in accountancy would be rupees 100 only, but for the purpose of Income Tax Act, this GST component of rupees 18 shall be added to rupees 100. That means for income tax law purposes, the cost of inventory is rupees 118. Now imagine a situation, you do have reconciliation. You have to reconcile the cost of raw material in accountancy with the cost of raw material in income tax law. And for this reconciliation, costing plays an important role. Why costing plays an important role? Because under section 148 of Companies Act 2013, certain class of companies need to maintain cost records. One of the cost record is in respect of work in progress. If I go to Companies Act once again, we do have Companies Audit Report Order, CAR 2016. In CAR 2016, para number 3, subpara number 2nd, it is required for the statutory auditors to report whether inventories have been physically verified or not at reasonable intervals. Now when it says whether inventories have been physically verified or not at reasonable intervals, the word inventory also includes work in progress. Meaning thereby, we statutory auditors have to report not only on finished goods, not only on raw materials, but also on work in progress in company's audit report order. Now if I wish to say whether work in progress has been verified reasonable intervals or not, in that very case, I can verify work in progress by virtue of documentation. We do have cost sheets, we do have movement in stock register, and then the closing work in progress. And for this purpose, cost records are extremely beneficial. What I am trying to convey, you cannot read costing in isolation or audit in isolation. You need to read audit, taxation, costing, SFM on a very conglomeration level. You have to read them collectively. So with these words, I wish you all the best for your examination. I believe you will study hard and you will study with sincerity and seriousness. And more importantly, when you will study, don't read any subject in isolation. What is auditing primarily? Auditing is an examination of all other subjects which you are studying. So you have to report whether income tax law has been complied with or not, whether company law has been complied with or not, whether costing has been complied with or not, whether accounting standards have been complied with or not. Meaning thereby, auditing basically is your reporting about the corporate governance mechanism, about the compliance mechanism, about the legal mechanism which are prevalent in balance paper from paper number 1 to paper number last. So with these words, I wish to have a good luck scenario for you, and I'm thankful to Hariharan sir also, a good friend, a younger brother who has given me this opportunity to share this dais for you people. Thank you very much.
Thank you for your valuable time. Thank you. All the best, students.